last week's 8% rally in silver prices took the precious metal to the highest level since May. We'll take a look in terms of some of the factors that have underpinned the rally in the silver price and also what to watch out for going forward. Hello and welcome. My name is Justin McQueen of Capital.com. And before we begin, if you can like the video, that would be greatly appreciated. And also send your comments in, it does help for a healthy debate. And if you have any recommendations in terms of some assets you want looking at, then just let us know in the chat section. We can see what we can do for you. Also, if you haven't already, please do subscribe up to the channel and click that notification bell if you want to be notified on our latest video content on the YouTube platform. Now, regarding the silver outlook, as I mentioned, we had seen a rally of 8% last week, taking the price of silver up to the highest levels seen since May. Now, a couple of factors behind this. Something I alluded to last week with regards to the fact that a lot of the focus had been on Fed Chair Powell's speech. Now, within that speech, it had been pretty much well documented that the Federal Reserve will most likely be slowing the pace of rate hikes towards 50 basis points from the previous of 75 basis points. And ultimately, that had been somewhat confirmed by Powell at his most recent speech. And in turn, that fueled this risk rally that we've seen and extending prices higher in terms of gold, silver, equities, and also the dollar coming off. I mean, it's essentially been the same trade across the board. And as such, another key factor had been the fact that, unlike what we saw around the time of the Jackson Hole Symposium, when we saw that bear market rally ultimately be faded, we saw Powell actually refrain from pushing back against the loosening of financial conditions, the rally that we've seen in risk appetite. And so therefore, by not pushing back, that essentially gave markets somewhat of a green light to continue to push higher. And as such, that's what we saw last week. Now, also, another data point that we did have was the non-farm payrolls report. Now, the non-farm payrolls report, in terms of the figures, and I'll just go through them, it was 263,000 jobs created in the most recent month. That was above expectations of 200,000. It also came alongside an upward revision. And then it was the average hourly earnings. The monthly reading was 0.6% above expectations of 0.3%. And then that yearly rate at 5.1%. So these were a pretty strong non-farm payrolls report. And as such, what we saw on the chart was an initial hawkish reaction. And what I mean by hawkish reaction is the dollar rallying, silver selling off, and same thing with gold as well, and equity selling off as well. Now, what was somewhat of a surprise was the fact that ultimately the move had been pretty much faded. We saw a gradual reversal throughout Friday's session, by which point we saw the close of the week. Much of the moves that initially happened on the back of the non-farm payrolls report had been pretty much back to pre-NFP levels. And to me, that was a little bit of a surprise, the fact that the dollar couldn't hold on to its gains given such a stellar report. But I guess ultimately, the outlook for December doesn't change. It's still most likely to be a 50 basis point. Ultimately, it's where the peak interest rate is, or the terminal rate, which you'll probably hear referenced quite a lot in financial media. And the terminal rate is started to sort of suggest around the 5% mark. So again, that's something as the fact that when we've seen this dollar selling off, it's helped buoy silver prices and also gold prices and other equity markets as well, given the fact that it's pretty much been the same trade across the board. Now, this morning, we did have some commentary out from the Fed Whisperer, also known as Nick Timiraos from the Wall Street Journal. Now, what he stated in his report was the fact that after the non-farm payrolls report, while the Fed will be slowing down the pace of rate hikes, they could perhaps signal a higher terminal rate than what is currently priced into the market. And so therefore, that was probably somewhat of edging towards more the hawkish spectrum from the Fed Whisperer. So we have started to see a little bit of an edging off in terms of the rally that we've seen in the silver market, just coming off slightly today. And also we did hit a key fib area, which I'll talk to you a bit later on. But again, some of these sort of hawkish hints have been somewhat taking off some of the some of the recent moves that we've seen in the rally across the silver space. But also as well, we do have some key data points to watch out for. Most notably will be the final US inflation report just before the Federal Reserve meeting next week. So again, that'll be one of the major factors to watch out for. And ultimately, if we were to see a higher than expected reading, while it's likely that the Fed will still stick with 50 basis points, the focus then becomes on the dot plot, where yes, we're expected to be higher than what we saw in the September staff economic projections, but it's relative to expectations. Now, the sort of peak terminal interest rate is roughly around about sort of just under 5%. And also markets are pricing in some cuts into H2 2023. So if we were to see the Federal Reserve actually signal that 2023 was to be maintained at higher than what's currently expected in the dot plots, and also perhaps maybe shifting higher the 2024 dot plots as well, then again, that could see a little bit of a pushback in terms of this market rally that we have seen. So that will be really the main focal point to watch out for the Federal Reserve meeting. Now, elsewhere, as I've mentioned, the sell-off in the US dollar, which has ultimately been one of the major factors that has underpinned the rally in equities, the rally in gold, silver, and ultimately the dollar's been struggling to really hold on to any sort of gains, as I guess many traders are looking towards the 2023 outlook, where we're discussing, the potential of China reopening. As we've seen over the weekend, we've seen more reports that cities such as Shanghai and Shenzhen are loosening their COVID restrictions. And given that stop and start Chinese economy for much of 2022 had been a tailwind for the dollar, ultimately we're seeing a pivot in policy. At the same time, we're seeing a bit of a pivot from the Federal Reserve in terms of just shifting the gears slightly lower to a slower rate hike pace. Now, of course, markets shouldn't really be focusing on the pace as such anymore. It's more where rates will ultimately end up. But given what we've seen already, it's fair to say that the markets are still focusing a bit on the pace. And I guess they're sort of suggesting that we're now entering a period of peak dollar, peak yields, and peak hawkishness from the Federal Reserve, and therefore we're just taking some of our bullish bets off the dollar, and ultimately that has been fueling the rally that we've seen across many markets. Now, in terms of some of the levels to watch out for, resistance-wise, really what sort of capped this latest rally was 23.37, which marks the 61.8% Fibonacci retracement of the 2022 range. Now, in terms of above there, we do have psychological resistance at 23.50 and also 24 as well. Now, in terms of the downside, we're currently just south of $23 at the time of recording. Now, just below there, we'd look towards sort of the 50% retracement, which sits at roughly around 22.26. Again, that's the 50% retracement of the 2022 range. And of course, just below there would be $22 in terms of general sort of psychological support. And then just below there, we do have roughly around the region of 21.50. Again, another psych level, but that has been the area where we had seen some pullbacks start to meet some buying interest. But we'll show you on the charts just where some of those areas are. So as we take a look at the chart here, and as you can see, in terms of today's candles, seeing a little bit of sort of exhaustion in some of the top side that we have seen in the past couple of sessions, and I guess that's somewhat expected on the basis that we have seen, pretty much an 8% rally in silver prices. So to see a bit of a pullback shouldn't be an awful surprise to many. But we are sort of just struggling at that key Fibo area at 23.37. As you can see here, it's also roughly around where some of the highs that we have seen on previous days. So seeing a little bit of sort of exhaustion on some of the buying momentum that we've seen. And at the same time, the RSI has also dipped back below 70, so not in overbought territory anymore. So again, just another indicator here that some of this upside is starting to see a little bit of sort of exhaustion. Now, as I mentioned, 50% fib, pretty much around 22.26. So that'll probably be your area of where you expect to see a little bit of support, on the basis as well that did cap the upside that we had seen previously. So we did see a breakout move to the next Fibo retracement. So I suspect if we were to see a more aggressive pullback and maybe a bit of a return to the for some dollar upside, then we can look towards 22.26. Now, overall, the market is still somewhat in a corrective territory. The outlook still remains a bit more rosy for silver and gold prices going forward, given the fact that we're seeing the dollar remain under pressure, yields also pulling back as well. It's only at which point we see yields move higher and also the dollar move higher, then that's pretty much when you can expect to say that, well, we're going to start to see a little bit more of a pullback in silver prices. So those are your two markets that you're looking out for when you are looking regarding the silver outlook as well. So is something to keep in mind. Meanwhile, on the top side, if we were to see a break above or a closing break above the 61.8 fib, then you'd be looking just slightly sub sort of 23.90 to 24 area would be the area to sort of watch out for on that top side. So again, those are your key levels to really watch out for in the short run. So that's it for today's silver outlook video. A reminder, if you want to see other assets, then just click onto our YouTube channel and you can find those assets there. And also pop onto the Capital.com website if you want to find more sort of analysis on a day-to-day basis. Thank you all for watching and good luck trading out there.